In fact, yesterday, when I posted on X, silver hit $67, I believe, 67 after having traded 121 a couple of weeks earlier. Now, it was up today. It closed about 77.65, which, is a nice day up, but still way down. But the media is still talking about the silver bubble and how the silver bubble popped, and it was crazy that silver went to 121. Look, it was a bit crazy how quickly it went to 121. But what's even crazier is that it took that many years to get to 121. It should have been there earlier. And it will be there again. It will be there a lot sooner than people think. So with silver prices still below $80, it's hard to imagine. I'm now saying that it's cheap to buy silver below 80, but it's been as high as 120. So seems pretty cheap given that we now have a benchmark that's much higher. So we're buying silver below 80 and $5,000 gold. 5,000 is the new 4,000. 4,000 was the new 3,000, which was the new 2,000, right? The milestones keep moving up, but you got to keep paying up because this is what happens when you're living in a world of inflation and de-dollarization. And in fact, one of the reasons that I think that the price of silver was down so much yesterday, it was down, I don't know, like 20% in one day. There was no real news that would have affected it. What I think affected silver was margin calls in crypto. Now, there may have been some in silver as well, because some silver speculators who maybe put their positions on more recently got caught up. But I think that a lot of the margin players who own a lot of crypto-related assets also owned gold and silver-related assets as part of the de-dollarization trade, right? A lot of people think that that trade includes gold and silver and Bitcoin. Now, I don't think Bitcoin is part of that, right? It's got nothing to do with it. It's a market unto itself. But the fact that people believe that means that there are a lot of traders out there that have positions in both assets. And if they had those positions on leverage and we had a 50% drop in Bitcoin and we also had a big drop in silver, right? It's likely that they had margin calls. And it's also likely that it was easier to dump their silver than their Bitcoin. Because I don't think that there was enough liquidity if they had bigger positions. Now, clearly they moved the silver market by getting out of silver. But they would have moved the Bitcoin market even more.
Silver crashed to $67 due to crypto margin calls forcing panic sales. Ignore media bubble claims. Buy silver below $80 before Asia. Buying Resume's mining stocks and tokenized silver will lead the real money revolution, not Bitcoin.
So I think there was some forced selling. And of course, the traders can see that. They drop the bids. They know that there are sellers that have no choice, so they back away. And whoever sold out yesterday because they had no choice got a lousy price. And that's why I don't encourage any of my clients at my asset management company or my customers at Schiff Gold to go on margin. It's precisely because of days like yesterday where you have big drops and people don't have the staying power and they're forced to sell. But the media, again, is trying to scare people out of gold, trying to scare people out of silver. Meanwhile, I think what's going to happen before we hit a new high in gold or silver, I think we're going to hit a new high in gold and silver mining stocks. They were up nicely today, about 5.5%, 6%, but they're still way off their highs. But given that gold and silver are still way off their highs, silver is what? Got to be like 20% off. Gold's still about 10% off its highs. I think as they make new highs, the mining stocks will make new highs first. Because I think one of the reasons that investors were so reluctant to buy the miners is they were worried about a big drop in the price of gold or silver because they kept rising. Well, now we've already had the big drop, right? It's now behind us. And so I think people ultimately won't be afraid of another drop when the drop already happened. And I think we'll have a bit of a slower rise this time that'll be more sustainable. And I think that will, give a good opportunity for the mining stocks to get some real traction. In fact, one of the biggest, tells about what's going on there is their average cost on their Bitcoin. Their average cost is just over $76,000. And even though we had a 10% rally today, Bitcoin is barely above 70,000. So MicroStrategy is down on its Bitcoin that it's been buying over the last 5 years. Imagine if Strategy had bought gold or silver instead of Bitcoin, how much more the company would be worth, because they actually would have had a big gain on their investment. Instead, they lost on their investment. But, of course, had Michael Saylor told people that he was going to buy gold or silver with the money he got from selling stock, he wouldn't have been able to sell all that stock at a premium, because nobody really wanted to buy gold and silver. They wanted to buy Bitcoin because they thought it would have a great return. Well, they thought wrong. It had a lousy return. In fact, if Saylor had just put all of his money in a money market, remember, his big pitch on why he needed to buy Bitcoin was that he was losing all this money to inflation. He couldn't just leave his money in cash and earn 4 or 5% interest because inflation was higher than that. And so he had this big problem. What am I going to do with all my cash? Because I'm getting hit by inflation. Now, the obvious solution was buying gold and silver. Had he done that, he would have had a great inflation hedge. But instead, he came up with a harebrained scheme of buying Bitcoin. And not only did he not keep up with inflation, he didn't even keep up with the money markets. He didn't even keep up with taking his cash from his balance sheet and stuffing it under his mattress. He lost. He has fewer dollars. After 5 years of buying Bitcoin, Strategy has less cash to show for it than if they had done absolutely nothing with their money. By next week, I expect the price of Bitcoin to be lower, maybe quite a bit lower. The same thing with Strategy. But all this, I believe, is going to be bullish for gold and silver. Because I do think that for many years now, the Bitcoin, promoters have created a cloud over gold and silver. That Bitcoin was being promoted as superior to gold, not just digital gold, but something that's better than real gold. That whatever you think real gold is going to do, digital gold will do it better. And so people were buying Bitcoin who might otherwise have bought gold because they thought they were doing something smarter, something better. And the fact that gold went sideways for so long just reinforced that idea, because it was being reinforced by the market itself. Gold was doing nothing, and Bitcoin kept going up. So that was validating the thesis that gold's time had passed, and the new times belonged to Bitcoin, right? Gold was dead, long live Bitcoin, right? And I kept saying, no, that's not the case. And that was proven last year when the de-dollarization trade really came into being on Wall Street. People appreciated why de-dollarization was taking place, why it was just getting started, and you saw the big move up in gold and a corresponding decline in Bitcoin. And in fact, when gold finally had that big correction, all the Bitcoiners came out and said, aha, now it's Bitcoin's time. All the money that was coming out of gold and silver, now it's going to rotate into Bitcoin. And you know what happened to Bitcoin? Then it collapsed again. So Bitcoin went down when gold was going up, and then it went down when gold was going down. That means the bubble has popped. The only question is, how much longer is it going to take the air to come out? But the writing is on the wall. Look, even Tether could see that. I just put up on the Schiff Gold channel and my main YouTube channel the debate that I did with Saifedean over the weekend in El Salvador. It was a Bitcoin gold debate. I decided to make it a Bitcoin Tether gold debate because before they had us on, a couple of hours earlier in the day, Tether ran a big promotion for their gold-backed token, Tether Gold. And I thought it was an excellent promotion. And so since we were at the Tether conference, I decided to focus more on Tether Gold than what I'm doing with T Gold, which, you know, is the same letter. But it's the same concept that if you really believe in tokenization, I mean, if you believe in crypto and you want digital gold, then you can have digital gold. You don't have to settle for fool's gold. You don't have to settle with a counterfeit imitation like Bitcoin. You can actually have digital gold. You can have something like Tether Gold, or there are a lot of other companies. In fact, while I was down there, I ran into 2 or 3 other people that had their own tokenized gold projects that they were doing. There are so many of them. I talk to these people all the time. This satisfies the real demand. Tokenized gold does what Bitcoin can't. I mean, Bitcoin promises, but it can't deliver, because tokenized gold is digital gold, right? It's real gold. The token is just the digital representation that you own the gold. It's not even, you don't even own the token. You own the gold. The token is your claim check. It's like if you go to a restaurant and you give them your coat and they'll give you a ticket, right? You don't own the ticket, you own the coat. The ticket just lets the the coat check person know that it's yours. When you give it to them, they go and find your coat. That's what's going on with tokenized gold. You're not even loaning the gold to the company that issues the token. It's your gold. The token just lets everybody know it's your gold. And the most important part about the token is that it's negotiable, right? If I could give my claim check to a buddy and they can go and get the coat and put it on and wear it, right? They're not going to check the ID. As long as you got the ticket and you go, they're going to give you the coat, right? So the ownership of the coat goes with the claim check. Well, it's the same thing with tokenized gold. I have tokens that represent gold ownership. If I want to give either as a gift or as payment for services or a remittance that I'm sending back to my family, if I want to send money to somebody, I can send gold. I don't have to send the physical gold. The physical gold sits in a vault. In the case of Tether Gold, it's buried deep in a mountain in Switzerland. If you buy a US dollar stablecoin, Tether knows this, right? They're the biggest issuer of US dollar-backed stablecoins, yet they're now the biggest buyers of gold. In fact, they just bought gold.com. They didn't buy the whole company. They bought into it, which used to be Amark, which changed its name to its website, gold.com, and they bought into that, and they, own a number of other retailers of precious metals. So now you've got Tether not only in the tokenization business, and Tether has been the biggest buyer of gold stocks. They've been buying a lot of the royalty companies in particular, a lot of the ones that we own in our funds and that I own personally. But now they've made their first foray into the retail of physical precious metals. So they're kind of bringing together physical precious metals with their token, which is exactly what I'm doing with T-Gold. So people recognize that the dollar is good as a medium of exchange, but it's lousy as a store of value. So what do people do? They use dollars as a medium of exchange, but they use gold as a store of value. But what tokenization allows, and the internet, is it allows people to use gold for both a store of value and as a medium of exchange, because it's actually better than the dollar at that too. But now that you have this technology where people can instantly transact in gold just as easily as they can in dollars, we're going to be rolling out products over time that will make it very easy for people to pay and be paid, right? What's more important is not that you pay in gold, but that you get paid in gold, right? That way you earn real money. You receive real money in exchange for providing real goods and real services. That's the way it should be. That's what money is all about. That's why Bitcoin will never be money. Because if you provide services or sell goods and you get paid in Bitcoin, you've got nothing. You've got nothing of real value in exchange for the value that you provided.